Hey traders, I hope you're all doing well and I hope you're enjoying a nice sunny day. We got a nice weather here in London. Let's quickly jump on to our analysis with natural gas, gold, and crude oil as usual. So let's start with natural gas first. So before I start my analysis, let me show you what I've said in my yesterday's video so that you know how we take entries and you know what to wait to get a good entry condition. Won't be long. Or I will look for a pullback with my Fibonacci tool right here. As you can see, we have this 50% retracement to 25% retracement. This is what I call the buffer zone. That is 7.511 that goes up to 7.770. Okay, awesome. So what do we have right here? As per my yesterday's video, I was looking for a retracement, 50% retracement right here. And this 50% retracement is also aligning with my major level of resistance that was previously a level of support. So now what to expect? As you can see, a bearish pressure building up right here. Now, if this 4-hour candle closes below here, below this previous candle, below this wick, then that is a good sell signal, and according to that target, take your target as 1 ATR above and 1 ATR below. Once you have a good entry condition, it's normally 1.618 retracement like that, but for beginners I always recommend 1 to 1 risk to reward ratio. I have a full chapter in my course how to manage your risk, but at this point maybe just manage your position once your target is hit, if your target is hit, and then move your take profit further down. So at this point, as expected, market looks bearish to me. It's below all the EMAs and it's now hitting the 50% retracement as well. So keep an eye here on a good entry reason. If this candle won't close below that, then you can expect another push up and you might get another engulfing candle here. So this whole zone is my selling zone. If you do not get entry reason here, it might push up to 20 EMA and give you entry reason right here. But if you get an entry reason right here, then I will take it as an entry. Okay, right here, let's check on Awanda. What do we have here? Similar as yesterday's video, market is now pushing up. It did not quite hit a buffer zone, but it did hit the major level of resistance that was previously a level of support. It can still push up to this 50% retracement, which is here 7.745, from where you can get a good bearish entry reason. We do have a good condition on Owanda, but here still do not have a condition to enter. But over there, obviously, if the market push down there, it will push down everywhere on every single platform. But the condition I'm looking at is we are getting on Owanda right here to enter aggressively. This would be your limit order, and then that would be your target 1618 retracement. But for beginners, I normally recommend 1 to 1 risk to reward ratio using ATR as your target, and then you can manage your position by moving your take profit below and moving your stop loss to break even, whatever you like. So this is how I will enter my trade. Do not take it as a signal, guys. Everything is for education purpose only, and please respect your lot size once you take your trades, because as you know, the commodity trading is really risky trading. You can get impulsive moves like this, and in the events like this, our stop loss will protect our account. So make sure you follow the proper risk management. Okay, right here, what do we have? We have a nice engulfing candle, bearish engulfing candle. Market bounced up really nicely out of this zone, but there was no reason to enter for me. It did reacted from the minor zone at this point. What you can do, you can either enter straight away right here. The ATR of this candle is 10 and the target would be 10 pips below and 10 pips above. This is how the target will look like. But just to be on a safe side, the way I enter, especially commodities, for forex I would have entered straight away, but for commodity the way I enter is something like this. Use my Fibonacci tool. This 50% retracement would be my entry right here. That would be my target. That would be my stop loss. Target would be $13 and stop loss would be $10. So at this point, this is how I take my trade. I'll take less than 1% risk, and right here my order is set. So in that case, if we have a hit of 50%, I will enter, take my short trades. Again, guys, do not take it as a signal. Please enter on your own risk. Everything is for educational purpose only. I have no idea about your risk account balance, so make sure you follow proper risk management and respect your lot size. So this is how I have entered my gold trade. Let's see how this goes. Can still push straight down, but like I said, for commodities I am a bit more conservative for my entries. Okay, let's check crude oil. Okay, perfect. We have a perfect entry condition. We had a perfect entry condition yesterday. So the way I trade double tops, let me quickly show you the way I trade double tops is. So let's say the market is here. So now in this condition, we have a nice double top entry. For double tops, I normally use 1.4 to 1, 2 to 1 risk to reward ratio. But for double top, normally what happens is once you have a good entry reason, you go 1 to 1 risk to reward ratio, which is now $2 right here. $2 right here. So now how we trade double tops. Once your take profit is hit, I normally push my take profit to below the neckline, which is right here. This is the neckline. Once we have a break of this neckline, this is the second way of entering the target. You can do either way. I sometimes keep my position below the neckline like this, sometimes 1 to 1. Like I said, for beginners, 1 to 1 is good because in that case, the chances of hitting your target increase. Then you go 1.4 to 1 or 2 to 1 risk to reward ratios. So in that case, this is how you take entries. And as you can see, the market is pushing down right here. So it is now about to hit my target. This is how you take and this is how you enter the trade. And now once your target will hit, what happens is in this type of pattern, the market push back up, retest this neckline. This is the neckline I've marked yesterday. Once we have a retest of neckline, I will look for a pin bars, a 382 candles, or an engulfing candle to take further push down, and I will set 180 as my target. So this is how you take double tops trade. And now it's still bearish. We can still expect a market to push up, retest the neckline, and push down again. It can still go down to 115.124. Crude oil is still bearish, not buying at this point. This is the zone I will look for a good buying pressure. Once we have a hit of this zone, I will look for a good engulfing candle, pin bars, or whatever the entry reason I teach you guys in my video. So that's all for now, guys. Any questions, buzz me on Instagram. I'll get back to you ASAP. I hope you trade green the rest of the week. See you guys in the next video. Take care.